Every time I get onto these panels the past few weeks, I feel like who remembers the Brady Bunch from the 1970s? Kind of reminds me of that little Brady Bunch layout. I go, oh, there's no one in the middle though. But anyway, welcome to another edition of Blockchain Panelist panel. Tonight we're talking about stores of value and in the global economy. Should be a good one. Seems to carry on from last week. We have a good panel here today, and should be a good, lively discussion. Looking forward to it. We'll start with going around with everyone giving their background and how you're involved in the blockchain and digital asset space. We'll start with if I pronounce anyone's name wrong, please correct me. I'm pretty bad at pronouncing things, so just correct me if I'm wrong. Harami, Urada Thompson.
Great.
I'm gonna go left here.
All right, so, excellent. And then I'm the Brady Bunch girl who doesn't have the blonde hair, I suppose. Hi everyone. Good evening.
We're blonde hair. We're all good. We're the anti-Brady Bunch.
So my name is Harumi Urata Thompson, and I am very happy to be a part of to take a part of this panel. Thank you, everyone, for being here tonight. I actually started my career as a banker, but very early on in my career, I switched into the technology side. Long before the words like Fintech and artificial intelligence, obviously the blockchain didn't even exist at the time. I switched into the technology side of this business. But I had so much fun. I guess I just never left truly from the technology side of it, and did a lot of different things in the technology, product management, innovation management. So it was just a matter of time when the blockchain was born. I began to kind of look into it, both from the investment point of view and technology as the platform. So that's what got me here today. I am doing a bunch of different things today, like probably most of you are. I have my own consulting firm, Hedge Consulting, and I'm I'm providing my service to Celsius Network, the crypto operating company. And I also have a space company on the side too, called Celestial Data. So my hobbies and my profession actually varies over a lot of different areas, but the bottom line is that I am involved in emerging modern technologies.
That's right. You said space company, correct? Did I hear that correct?
Yes, you heard me correct. And then I don't mean real estate space. I really mean the space, like Moon and the Mars.
Yeah, so I heard we had a launch last week for the first time in 9 years. You must be pretty excited about that.
People escaping what's happening on the Earth, yes.
Yeah, it's better out in space right now, I guess, right? Yeah.
I don't know, but probably yes.
And what's your role at Celsius Network?
I'm a CFO.
Okay, and for those who don't know, I mean Celsius. I mean I have an idea, and I know what's going on. But what is the primary business at Celsius, and what you're involved in?
Okay, so there's a B2C and the B2B aspect of it. B2C is how it started, so I will tell you a little bit about that side. Effectively, it's think of it as the modern bank, but pay back a lot to the depositors. So the company takes deposits from people like you and me who have some Bitcoins, and actually Celsius Network takes 20 plus different types of coins, including the gold. The depositors, just by owning and then depositing through Celsius Network, they earn interest on it, on each respective currency. The interest rate, just like bank gives different interest to different products, different currency earns slightly different interest. And the business model is that the company deploys the coins and earn any kind of return, whether making loans with the coins, deploying them to some exchange platforms where they have the sort of lending platforms. That's really the core of the business model, and there is an institution sort of model of it too. So the loans are made to both retail customers and institutional customers. Effectively, in a nutshell, what Celsius Network does.
Gotcha. Okay. And Manny, I read your quick bio there. You seem to have an illustrious career in the financial markets, the CEO of NASDAQ, a lot of technology stuff. If you want to fill us in more on your background and what you're doing on the legal side of things and compliance side of things now in the crypto space.
Yeah, absolutely. And I don't think I paid you to say that, right? But maybe I should. But
no, but you owe me when the lockdown's over. You owe me at least a beer, even if it's warm. I'm fine. It's all good.
Did you some like Bitcoin micropayments and stuff like that? But yeah, thank you. I'm glad to be here. So I'm an attorney in New York, and I have a lot of capital markets experience. I worked at NASDAQ for many years. Actually started out at FINRA as an examiner when it was called NASD. So I have that much experience in the industry that I actually predate the existence of FINRA to a legacy entity, which was National Association of Securities Dealers. So really, I've been in the industry close to 30 years now, and I love capital markets, and I love financial services, and I really focused a lot on regulation and technology and trading. And then moved from compliance into legal. I was the CCO at NASDAQ. I worked at JP Morgan as in-house counsel covering electronic trading. I worked as GC of a hedge fund called Mana Partners, and been in private practice for close to 3 years now. And I pivoted a lot of my practice, although I still do capital markets work, I pivoted a lot of my practice to blockchain. I went to MIT Sloan and got an MBA, graduated a couple of years ago. I did the executive program, and I became keenly interested in data. I remember I was, working on something, and someone came to me with this Mount Gox kind of problem, and 2013, right? And it just seemed like it was so far-fetched, kind of out there. What's Mount Gox? What's Bitcoin? And if you think about where we are today, I mean, we're light years beyond that to one extent, but we're really not in terms of future of development of projects and of disruptive technology. So what I love about the industry, what I love working on with my clients, is not only getting them set up to either create trading vehicles or to do some type of work within the blockchain space. I mean, a lot of it is involves trading or financial services. What I love about the technology is I just love the disruption, and I love really the payment side. So I'm hopeful that once things kind of, we move out of the environment that we're in, both economically through COVID, and we get past the situation we're in right now, that we really kind of pick up from where we left off in terms of focusing on how far can we take blockchain, moving beyond. Clearly, the industry, as far as I'm concerned, took a black eye from ICOs and a lot of these get-rich-quick type schemes, and focus again on the significance and the importance of who we are and what we do, and that the benefit of blockchain, the benefit of focusing on cryptocurrency as a store of value in uncertain times with uncertain governments, the benefit of focusing on using blockchain technology for payments is just tremendous in terms of facilitation of international trading, obviating the need for foreign currency and foreign currency deviations, and creating a stability that unfortunately doesn't exist right now in the marketplace. So a lot of my focus has been working with companies from very nascent stages in terms of formation, all the way in terms of launching them, in terms of setting them up as a legal entity, and then working on getting them set up to raise money as well.
I mean, if you're going to break your clients down into categories, I mean, are these hedge funds, or these project tokens, or are they vendors in the industry? What type of clients come to you for legal advice?
So it's a mix. I have some bigger clients in terms of they wanted to set up some type of trading vehicles. From one perspective, I have other clients that are more focused on technology and around containing and making sure that they have the protections around the intellectual property of the technology. So it really depends. A couple of years ago, obviously there was a lot of interest in setting up trading type vehicles, setting up vehicles to actually trade virtual currencies, digital assets, Bitcoin, pairs to try to do pairings, and then obviously that deviated and moved more into more technology front end type applications as it became more and more difficult with regard to licensing, and as that environment became crystal clear as far as I'm concerned, and I know maybe we'll get into it later, but this, some people think there's ambiguity in the market about what necessitates licensing and what doesn't. And I've always been very conservative and of the opinion it's better to have licensing than not. As that became more and more clear, I think enterprises, projects that had the financial wherewithal to pay for the legal services and to pay for the regulatory fees and infrastructures that necessitated getting licensed stayed on that track. I think others, when they realized they had to go down that road, they kind of deviated into focusing more on providing more of the technology solution for some type of front end or some type of interface, some type of data analysis.
Well, I'm sure we'll get into that pretty deep shortly. I'm fascinated what you're seeing there. And Brian, read your background as well, and you started out in writing, and you got into trading, and now into blockchain in the digital space, right?
Yeah, I
want to fill us in.
Yeah, I come from a pretty non-traditional background as far as finance and markets go. Mostly what I studied at college was humanities, English textual studies, rhetoric, politics, things like that. And after college, what I wanted to do was in the restaurant industry. So I went to culinary school. I worked in restaurants, and a couple years into that, I had a workplace injury that basically sidelined me from being in that kind of active role. So back in 2015 or so, kind of recovered from injury, trying to figure out what I wanted to do, and I had been investing for probably about 5 or 6 years at that point. And I started looking at it a little bit more seriously. And I was pretty much just doing sort of a thematic approach, not really a lot of active trading, just sort of general political currents and economic trends. And then I actually went back to school in 2017. I was taking a finance class and a couple of business classes with the idea of maybe setting up a farm or a CSA or something like that was a little bit more on the run. And there were a couple of kids in the finance class who were looking at CoinDesk. And I'd heard of Bitcoin before, and these kids were pretty sharp. I was one of the other people in the class. Both of them already sort of had their foot in the door of finance. Regulator in New York, and at some point the light bulb kind of went off, and I realized that these are the people that are going to be running the financial industry in a couple of decades. So that I talked with them, and I started getting a little bit more active in the space, going to events and things like that. A few months after that, I worked for a startup that was basically a decentralized trading platform. So I helped them write their white paper. I basically ran all their communications, so social media and all sorts of things. So I did that for about a year. And then a couple of years ago, there were family circumstances that basically there was a family member that had savings but no income, and it became clear that putting a long-term investment plan was something that needed to happen. And I had been around enough by that point to realize that most wealth managers tend to overcharge and underdeliver, and I was pretty sure that I could probably do better on at least one of those counts, it being family. So I started getting into a lot more macro issues and trying to understand what asset classes actually do and how they sort of relate to one another in a portfolio. And that's something I've been studying pretty actively for a couple of years. So I still do some trading on the crypto side, but mostly I'm focused on the equity side because the differentiation between asset classes is a little bit easier for me to play. So that's mostly what I've been doing for the last several years.
Well, I'm sure we'll get into it a little deeper shortly, but when you say you mostly on the equity side and the crypto side, you understand what the dynamics between the traditional asset classes better than with Bitcoin and how that fits into the global macro viewpoint?
Yeah, Bitcoin, I think, is a little bit easier. I mean, the whole thing with crypto, obviously, is, there's the whole Bitcoin, the large cap and the altcoin dynamic. And, I'd been trading it for about a year, and, I'd started learning a lot more about technical analysis and that kind of thing. And what I realized is, the dynamic just sort of kept shifting with, which one is performing at any given moment. And it wasn't very consistent. Versus, something like stocks and bonds, or, stocks and bonds and gold and commodities, what have you. And those levers were a little bit more consistent, and there's a longer term historical pattern. So, and then the other thing with equities is, there's regular trading hours. So I do kind of enjoy being able to, knock off at 4 o'clock if I, really want to, as opposed to, having a Bitcoin trade on where, you can put your stops on or something like that. But, it's the market's just going to keep going. And, it's a little bit, it draws your attention away from everyday life a little bit more.
Like watching Bitcoin on a Saturday night at 8 o'clock when it drops $1,000 in 10 minutes. You're missing an opportunity to be short there. That's an opportunity to profit. You got to be up 24/7. Anyway, that was an exciting night. But anyway, good. We'll dive back into that a little bit deeper shortly here. And I apologize, Xenia? Am I pronouncing that properly?
Yeah, my name is Xenia.
Xenia, okay.
My last name is unpronounceable, Vazemskaya. That's why it's Z, short for Vazemskaya.
Okay.
So hi, everyone. Thank you for having me. I'm excited to be here and excited to be for this discussion. I'm the founder of It Takes Two. We help companies in fintech and digital asset space with content marketing and PR. And for over a year, I've been hosting a podcast with my twin sister. By the way, that's why It Takes Two, because we're identical twins. Podcast called Value Tokenized, about digital securities and the future of finance. That's why and I've been in this space for over 2 years. And the perspective that I saw personally, and we saw after talking to hundreds of experts and working with many projects, for me, it's really interesting, because I think that one thing that crypto has already succeeded in, and Bitcoin is a good example of that, is crypto as a store of value. It's like the killer application. It's one of the main things, because I read a research recently that despite all the volatility, Bitcoin succeeded in preserving investors' wealth during the time of pandemic. Like, it's not like large percentage of growth, but still, like, it's here and like it does this function. So if we compare it to what's going on, like with some of the world's like largest currencies, like what's going on in the world economy in general, crypto as a store of value, like different kinds of crypto as a modern store of value, it's really a good application. It's another question which crypto like works better for this purpose. So yeah, it'll be very interesting to be on this panel today and to discuss it with such like wonderful experts with really interesting like different backgrounds. So yeah, thank you.
It sounds good, and curious to see what you're seeing in the space. But before we move on, you said you worked on multiple projects. You don't have to mention names. I'm just curious, what was your favorite project you worked on, and what would have been the least favorite project you worked on?
For sure. All right,
you
now
don't have to
we're
mention
working
names.
with a project.
I'm just curious what they were. What's
Yeah,
that?
I think I'm free to disclose it. A project called 2 Prime. That are working on a token that's called FF1, which is basically, in a nutshell, it's a stable coin that can grow and basically a modern store of value. It's one of the function, one of the things that this project is trying to achieve. I think I'll mention more, but yeah, this is probably one of my favorite, exactly a project that pursues this goal. Because for me personally, it's one of the most important, like my favorite applications of crypto. So that's why I would name this project.
Hey, we'll get to that in a second here. Just real quick, my background, I've been in the foreign exchange industry for, almost 30 years now. Well, we'll be 30 years this year. Started out at the banks in 1990 and moved to the hedge fund, the buy side in 2000, where I was a discretionary trader, and then started building systematic models, pure, just simple CTA type stuff, the Graham Capital types, the John Henrys, just things like that. Then moved more into the high frequency space. And about 10 years ago, 11 years ago, worked at a couple high frequency trading shops, a couple really, really big names on the FX side of things, doing analytics, liquidity profiling, execution tactics, things like that. And then, I left there a couple years ago, worked for a Fintech company called Seabury, right down the street from me. I worked with a good friend of mine. And we were involved in some crypto projects. So that introduced me to some, people in the industry, custodians and exchanges and things like that. And then about 6-7 months ago, I moved to Floating Point Group. Manny, you mentioned you're an MIT alumni. I work with a bunch of brilliant MIT kids I call them kids because they could be my kids, right? They're half my age for all intents and purposes. But we started a connectivity algo execution product where clients will come to us, give us orders to trade on their, with our algorithms. We have smarter routers, some smart execution tactics, and then we have a DMA type product, smarter router, liquidity hub, you can name it. They all sort of overlap, and that's where I am now. And it's we're getting a lot of interest, a lot of interest picking up in the industry now. But going back to the main topic of what we're going to talk about is store of value. And I'll just throw out, we all see what's going on in the global economy right now. We all hear about the Federal Reserve just printing trillions and trillions of dollars out of thin air. ECB, BOJ has been doing it for 30 years. There's all this talk that the US dollar, which is the world's reserve currency, and I don't know, something like 80% of the world's trade is invoiced in dollars. United States holds trillions of dollars of assets of foreign governments or pension funds or asset managers. So there's a big demand for US dollars, or a big use for it, right? And you hear people like, Mike Novogratz, Paul Tudor Jones talking about inflation, and they're putting some of their net worth into Bitcoin for an inflation hedge, store of value. And that's all come out. Well, Mike Novogratz has been talking about it a while. Paul Tudor Jones just came out and said about a month ago. So the question is Bitcoin the next store of value? Does it take over whatever is considered a store of value now? Is there another store of value that is going to take over for Bitcoin? Is Bitcoin going to be it? Is the dollar going to go into a free fall? What does the panel think here? I'm going to start with Brian first, because Brian mentioned you're trading, and you said you don't trade much with Bitcoin because you're not sure the dynamics, the intermarket relationships, or maybe, what's the driving force behind them?
So with Bitcoin in particular, I think it's versus Bitcoin and alts, it's a little bit easier for me to grasp those dynamics, because I've mostly seen it as sort of a play on a high liquidity environment. I think, we certainly saw that in 2017 with, just the legacy markets just, ripping it, and then Bitcoin obviously made an all-time high around then. As far as a store of value, I'm open to it.
Well, can we agree on what a store of value is? Does anyone want to throw out what their opinion of a store of value is?
When we began to talk about store of value, right? Years ago, when Bitcoin really became a thing, and then a few other currencies, and then I actually had to look up from different sources what people say about store of value. And seems like there's a little bit a different definition based on what people say, and I don't think it has unified yet today. But at the end of the day, it's about, like, if you have something, can you actually put value on it, right? Does it have some kind of intrinsic value that we can trade it with something else? So, indeed, when people put something like vintage wines or artwork as some of the potential items that have stores value, my stance is that if they really do store the value, these items that I just named. And Bitcoin certainly does. Ether certainly does. And so are probably 50 to 100 other coins probably do. And now we are talking about stable coins, and then gold's getting tokenized as well. I mean, who is to say they don't store value? So if we have to say they do or they don't, I would say the store of value does exist, and then within the sort of with this coin world. And do some of these old coins do they have a store of value? I would have to say yes, until somebody's going to prove me otherwise.
Yeah, so I just want to clarify something, since obviously this is a Bitcoin panel. When I say that I'm somewhat undecided about that, the caveat is that as a U.S. dollar investor, just because for as the world reserve currency and as because of some of the reasons that you were outlining there, I think the role of the dollar is a little bit different. So if I were a Turkish lira investor or an Argentinian peso, a yuan investor. I mean, there's a number of countries I could name where, I would say pretty much, I would be much more open to saying, yes, absolutely, it's a store of value. It preserves it much more efficiently, or it's not susceptible to the same influences that some of these, they're decent sized economies, but they don't have the same leverage of monetary policy, the same amount of demand for their currency, and they might, in the case of some of the countries I mentioned, they might have some pretty unconventional or unstable fiscal monetary balance. So, again, I just want to clarify, as a U.S. dollar investor, I'm certainly very open to the idea of Bitcoin being a store of value, but I just wanted to throw that caveat in there before we got too far down the road.
Do you have to be able to use a store of value to purchase things? I mean, obviously the dollar, you go to your Starbucks and buy a coffee or buy a car. You can import a car from overseas.
Yeah, I'll jump in. It's Manny. No, I mean, yes and no, right? I mean, inherently, that's one of the functions of a store of value. But I think the best analogy, and I saw one of the comments earlier, is to compare it to gold in terms of how economies matured, and in terms of creating a currency that was backed. And gold's probably the best example of a store of value, and gold has inherent value. You have facilitation to buy and sell gold. I guess at one point you were able to show up with gold coins and buy products or save or save those gold coins and exchange them for whatever currency within your jurisdiction, within your country. I think the problem when we talk about, from my perspective, in my humble opinion, when we talk about Bitcoin as a store of values have mass adoption. Okay, so we're getting there. And as time goes by, we have more and more mass adoption. But to your point, it was the anniversary of the pizza pies a couple of weeks ago, right? When someone had to buy bought pizza with 10,000, I guess it was like 10,000 Bitcoin, right? So that was novel at the time. I think it was like the 10-year anniversary, because could I use Bitcoin to buy something? And as time goes on, more and more companies, entities will take Bitcoin in terms of facilitation of an exchange, and use it almost as based upon its monetary value. But to me, that still requires some maturation. And what I'm talking about is mass adoption and broader appeal. It's getting there. On the flip side, does Bitcoin have inherent properties in terms of some stability? Let's say that we went through this economic hardship a couple of months ago with the pandemic, and things are still kind of rocky right now. And look at how Bitcoin reacted or didn't react. What I'm actually surprised about is the fact that Bitcoin, to me, acted like a very correlated asset to, let's say, the Dow Jones. So I expected, and I don't like to admit that I'm wrong, but I was wrong. I expected Bitcoin to skyrocket when we went through the economic downturn in March and into April, because I thought there would be a flight to Bitcoin from traditional assets. It didn't work out that way. I think Bitcoin demonstrated more of a correlation than less. I understand the argument, the counter argument to that is that there was a liquidity crisis in terms of there was a crunch on liquidity at the time. So we were all going through that. But by the same token, does Novogratz look at, just throwing his name out there, does he look at Bitcoin as another asset class? Do these funds that have, 3% of their investments in alternative products, do they look at Bitcoin as another asset, just an alternative asset? I don't know.
I'm a trader. I view Bitcoin as something that goes up and down on the chart that I can make money from. And I speak to a lot of traders, hedge funds, CTA types, and they applied their models to it or whatever methodologies they have. And for the most part, they view it as something that's volatile, something that they can take advantage of intraday swings. It tends to trend. You go in sideways periods, but they view it as a trading vehicle to make money. I know a lot more of those types of people than the people who say, I'm going to own Bitcoin because, we need digital currency. There's a max supply of 21 million, and it can't be overprinted and be inflated out of existence. And I'm going to buy that. Now, I know there are plenty of people who believe that. But from the traditional trading world, most of the people I talk to view it just as a trading vehicle. It could be euro dollar. It could be IBM USD stock, or, this is just BTC USD. And it offers an opportunity to make money. That's the vast majority of people I talk to. In terms of, there are family offices out there who I also talk to who do view it as, well, I'm going to put a little bit of money in here. And if I'm wrong, well, it's not too much of my portfolio. But if the world really does fall apart and really does become mass adopted and becomes a true store of value and becomes socially acceptable, well, then I'm going to be in early and it's going to go to 100,000 and I'm going to make money. And then there are the true believers, right? There's some of the extreme believers who really think we should just do away with all fiat currencies and just have a global digital asset. So then the question, if that's going to become the case, how do you possibly get there? And Xenia, is stable coins, is that the answer? I do know quite a few people who believe stable coins is the answer. Not Bitcoin, but stable coins.
Sure, but before that, I think you just gave this perfect down-to-earth definition of a source of value, like what people think is something that can preserve your own wealth and help you multiply it. So I think we can also look at it this way, and that's what people expect, from Bitcoin, those who are there, in the space professionally, but retail traders as well. So I think that stable coins have a lot of really interesting applications, because even if you take a look at what, for example, JP Morgan with a JP coin was trying to do, but there are also private banks like Bank Frick. What they're trying to do is actually serving the demand for our private liquidity markets, because we saw that, for example, security token industry failed in that, and I think that stablecoin will most likely see some of the interesting applications there. I think I'm reading a lot of research that's coming out. There was one really interesting article on Cointelegraph saying that algorithmic stablecoins are the future, because when we have a stable coin that relies on the currency, for example, dollars, and there was a very funny joke that why pay taxes if they can just print more money? And this is actually a really good point. So I believe that stable coins that are tied to the assets that we're trying to step back from, because people are getting disappointed in them. Maybe this is not a solution, but if we take a look at something that supports its own balance, something like algorithmic stablecoin does, this is probably one very interesting alternative.
Yeah, and the point on the why pay taxes, I think, is print more dollars. without going deep into it, in reality, when the Fed prints dollars, it's actually and that goes to U.S. government. That's actually a loan to the U.S. government, and then you got to pay taxes because the U.S. government's got to pay that back, right? That's without going too much deep into it. So every time they they issue bonds and they issue U.S. dollars, it's effectively a loan. And when those dollars you own is basically a loan, right? So we don't have to go too deep into it, but that leads to the point where they are printing so many dollars, and as Brian mentioned before, it is the world reserve currency, and the rest of the world is printing euros and yen. And they've been doing it for a long time. Do these currencies? Every currency can't devalue against themselves. I mean, you can't. Every currency just can't devalue once. Something, if the currency is still around, some currency still has to exist and rise in value. But one thing they can devalue against is a store of value. They can, in a sense, all devalue against gold, and gold has sort of traditionally been the store of value. Will gold continue to be the store of value? We hear people say, well, gold's too heavy to carry around, but Bitcoin and digital assets I can put on my little Ledger Prime or whatever it's called and plug it in somewhere, put it on my computer. What will get Bitcoin to the point where it's competing with gold to be the store of value? Harumi, you're in the borrowing and lending business. What do you see on your end in terms of the people or your clients, the types of clients that are involved in this?
Sorry, go ahead.
Their view? I would say you're in the borrowing and lending business. So your types of clients, I think you mentioned earlier, sort of like almost a banking function, borrowing, lending, and earning a spread, correct? That's simple. Let's put it in simple terms. Instead of dollars, you're borrowing and lending coin and earning a spread, right? It's just traditional lending, banking business. So you have depositors, you take these coin in and you find someone else on the other side, and you lend that out and you make that spread. And that's for all intents and purposes what you do. So the clients you have, how do they feel, and what is their prime reason for borrowing and lending and doing this?
Today, so I'm gonna go slightly probably off the topic and then talk about what blockchain really kind of like, and everybody was eyeing the blockchain could become, especially in the sort of this fintech world and what it's doing right now at this moment, right? So I think the phrase of bank the unbanked was really kind of like one of the things that blockchain was trying to achieve. And so far, it hasn't quite gotten there yet. Right now, it's still kind of people who have a good sort of understanding of technology or have the money to invest into this kind of alternative investment. It's and then taking a little portion, putting a little portion of their portfolio into this to kind of make money. And then, as I think was that you, Tor, earlier, you were saying that see which way the market kind of goes, and because it's such a small portion, if it goes down, oh well. If it goes up, great. That's sort of like how the cryptocurrency, generally speaking, is treated still in most cases at this very moment. So in terms of like where we can take this in terms of store of value, like will it ever take over gold? I think the tipping point is going to have to be, and then the phrase again was already used, but mass adoption, and it goes beyond this very small portion of people in the 7 billion people world. How much of people will actually understand it and will hold it and will kind of look to it in order to understand inflation or lack thereof. So I do think that it's, I do think that the tipping point is not going to come until the true sort of like, let's bank the unbanked kind of like, concept to start moving. And a lot more people look to this instrument, this technology to say, okay, this is where we go just to kind of gauge where my economy is right now.
How do we get to that tipping point? I know, Nick Spanos brought this up last week about Venezuela. I mean, I've seen videos, whether they're real or not, I don't know, of bags, like garbage bags down in Venezuela full of, paper money, right? Kind of like 1920s Germany when they were burning well, I don't know if they weren't even called Deutschmarks back then, but they're whatever the equivalent of the German currency was back then, they're burning them for fire. What point, or what is the tipping point that gets Bitcoin or digital assets for that matter as a store of value? And down in Venezuela, they seem to be embracing digital assets and Bitcoin in a huge way. But then I don't know the last time anyone on this panel has ever been to Venezuela or had to purchase Venezuelan bolivars to do anything with.
Yep.
But I can go all over the world and use US dollars, right? So, so some place like Venezuela, maybe it's a little easier, I don't know. But in the United States or the US dollar or the euro or the Japanese yen, it might be a little more difficult. So what is that tipping point? Is it pure just slow mass adoption of individuals demanding it? Does it have to come mandated down from a government to say this is what we're doing? And we're all just going to turn your dollars into digital Bitcoin now or digital stablecoin? Does the world have to go into a financial collapse to get globally everyone to just abandon dollars and go to a digital coin? I don't know. I don't know what the answer is. I could take guesses, but I don't know.
I want to jump in if I can.
Yeah.
So one of the things that I used to, when I was at JP Morgan, I covered I was in-house counsel. I covered electronic trading, and I used to work around the ETF market. And what I think is interesting is you have Bitcoin futures, and you also have these many attempts to get a Bitcoin ETF, exchange traded fund, or exchange traded product, ETF or ETP, approved by the SEC. And those filings were inherently rejected because the SEC felt, now again, I'm trying to differentiate between the CFTC and the SEC. There's a security now, it's exchange traded product, let's say, backed by Bitcoin. The SEC was concerned about manipulation in the market. And over again, the CBOE, the exchanges tried to convince the SEC, hey, look, we will surveil properly for Bitcoin any type of manipulation within the marketplace. And we have to understand how Bitcoin trades, right? You could trade Bitcoin on Coinbase. You could trade people trade Bitcoin bilaterally. So they're dealer to dealer trades. There's no reporting mechanism for Bitcoin. So inherently in the market, there's a benefit because people could have cold wallets where Bitcoin is, but there's a lack of transparency. And now we're going to get into tension between centralized and decentralized. Okay, so gold, you have many products that are based on gold in terms of you have gold ETPs, and it took years for the exchanges. There were massive manipulation schemes with gold, right? It took years for the markets to accept the fact that you could have these products that are trading where the underlying is gold. It took years to overcome that. So I think from a regulatory perspective, and this is my own personal opinion, there's still, in a regulatory community, there's still this concern about potential manipulation in the Bitcoin market. And you mentioned it earlier. You see a lot of vol, which is great. I mean, traders want vol, right? Before we had all this volatility in the marketplace now, I mean, the market was like a hockey stick and went up. Stocks were more and more expensive, and you didn't have the vol. So traders were looking to vol. Great. There's a lot of vol in altcoins. There's a lot of vol in Bitcoin. I think the issue, again, is stability. So I'm not necessarily talking about price stability, but is that volatility in the market based upon issues in the marketplace that would affect the price, or is that based upon potential manipulations? There's still that concern in the marketplace. And I think we need to overcome that concern. And we need to do more and more surveillance. We're doing surveillance and the exchanges do surveillance, but there's still the concern that there's potential manipulation. And if that concern is out there, I think it will not be able to compete with gold until we mitigate that concern. That concern becomes less and less.
So how do you determine the value of Bitcoin? Every day I see Amazon trucks go up and down my street, and people every day are getting boxes and boxes of Amazon deliveries, right? More and more people are watching Netflix because we don't have anything else to do, or Uber Eats, and they are spending money and those stocks are earning income. And you can say, they just made X number of dollars. In the interest rate markets, the bonds, there's, you have an investment grade or non-investment grade bond earning a yield. Right. Is that yield, Bitcoin, does it have a yield?
But every time a transaction in Amazon is done, there's some recordation of that transaction. So every time a transaction in Bitcoin is done, there's a recordation of that because it's immutable. It's on a blockchain. But is there transparency? You don't have that transparency. Right? I mean, that's the issue where every transaction in Amazon globally, it's on a consolidated tape. So the price of that stock, the bid and the ask, is absorbed, is displayed. And then when a transaction occurs, you have a depth of book, and Brian knows this, and you know this, Tor, right? You trade based upon the data available and all the historical trading. We don't know the historical trades in Bitcoin. I'm just, again, this is objective. I'm not, this is not my subjective analysis. I'm not giving legal advice or anything. I'm just saying objectively comparing Bitcoin to Amazon, or comparing it to a NASDAQ listed stock. There's a ticker symbol. There's price transparency, price discovery, depth of book. You don't see that. You could look at the price of Bitcoin on, let's say, Coinbase, and you could look at the price of Bitcoin on Kraken. Why the price is different? When you look at the price of Amazon, it has a bid and it has an offer. You don't have different prices on different exchanges that's listed. I mean, why does that occur?
Manny, I do think that Trey is bringing up a really interesting point. Like, how do you really determine the value of Bitcoin? And yes, there's at the end of the day, it comes down to supply and demand. So that does decide in the marketplace what the value of that particular instrument is right now. But if you're talking about Amazon stock, or if you're talking about JPY against USD, you always have sort of a way to vaguely, and it's not always right, but vaguely kind of measure the intrinsic value of that particular entity, whether it's a company or country. What is the purchasing power of the country, or what is the real sort of fundamentals of the company? That's, I think, that we have to really ask when we talk about the value of these cryptocurrencies. What is that intrinsic value measurement methodology that we use? Or is it just purely bid and ask, and then how much demand, how much supply is there? So that's going to be only the way we measure the currency. I mean, in case of something more widely accepted, and I use the accepted word with the quotation mark around it, maybe one of those, or maybe a couple of those currencies might become globally utilized currency in a true sense of meaning. And then you start talking about, okay, there's this population in the world, and then this is how much is circulating in the economy, thus the intrinsic value of Bitcoin is this. Maybe there will be a day when we can do that. Right now, we don't have that kind of fundamentals that we can go back to actually determine the true value of Bitcoin. So we have to kind of look at different exchanges, Manny, like you said, and say, okay, well, here it's trading about this value, here it's trading about this value, so I would pay up to this level to buy a Bitcoin.
Right, and I agree, but to me that's a lack of price discovery. So Bezos sells a big block of Amazon, it's reported. And even though there's a delay, we see it, and that might, have put downward pressure on the price of Amazon. Right now, I'm looking at the price of Bitcoin. It's $9,800. Okay, what happens if a whale sells a significant amount of Bitcoin? That could depress the price of Bitcoin. I don't see that. There's the lack of transparency. So there's more speculation inherent in me buying or selling Bitcoin, because there's stuff going on in Bitcoin that I will never see. There's stuff going on at Amazon, I hope, that I do see. That's, to me, is the difference in terms of determining, me making an informed investment decision. Obviously, people who trade HFT and all you traders, what you're looking for in terms of, price parameters and whatnot. And of course, there's scarcity and limited supply. But I'm trying to draw analogies between a traditional capital markets trading structure and then introducing how Bitcoin kind of would trade, either similarly or differently.
No, Manny, I agree with you there. I agree with you there. But, and again, we're talking about two different kind of value, right? One is the market, where the market is. Whether or not it's transparent or not is a little bit different matter here. We are talking about, okay, there's demand and there's supply for this particular instrument. And then there's intrinsic value of this. And then when you talk about something like Amazon's stock, we roughly know, when you analyze the financials, you kind of think that, okay, this should be really where the company value should be, but we are trading here, we're trading here. So it's an overvalued, undervalued. In case of something like Bitcoin, we don't really have a way of saying I think that this is overvalued because of X, Y, Z, the fundamentals, right? So, I mean, to go back to Trey's question, how do you really measure the value of it? Is the price discovery only the thing that we've got? Or is there like fundamentals that we can go back?
I mean, you got to ask why on Monday night was Bitcoin trading around 9,500, 9,600 around 4 p.m. And then around 7 o'clock that night, it went from 9,700 to 10,400 in 5 minutes. And then it went sideways and did absolutely nothing until Tuesday morning at like 11:15 a.m., where it then proceeded to drop to 9,300 in 5 minutes. And then it rallied and just stuck around 9,500, 9,600 since. Is that just a massive no liquidity in the market? Does that mean someone came in and there's one on the bid and someone came in with $1 billion? What is driving those moves? Obviously, it's without even seeing, you can just say someone came in and whacked the market. But is there fundamental news that comes out that does that? And in this example, you can probably pretty easily say it was someone came in and just bought a whole boatload, and someone came in and sold a whole boatload, right? But they're when the market seems to be moving that fast, liquidity seems to disappear real fast, and then it goes until you run into a wall of buyers or a wall of sellers. But going back to, does it have any kind of intrinsic value or anything? Well, my mom's old. I was using my mom as an example, but she's not investing in Bitcoin and she's not investing in stocks, right? She's just investing in whatever she has. But if you're a young person in your 25s and 30s or late 20s and you're planning your retirement account and you're going to allocate, what's the old 60-40 rule, or whatever the portfolio is based on your age, subtract it from 100, and that's how much you put into bonds versus stocks. How are you going to tell them to go, hey, let's go buy some Bitcoin, and let's go buy some Bitcoin and put a portion over here? Are they buying it because they truly believe it's going to be a massive store of value and go to 100,000? And by the way, I mean, as far as Bitcoin goes, I am a big believer in Bitcoin, and a couple of years ago, I would have thought it'd been a lot higher by now. I just think there's a lot of interest to sell when it goes up. That's all I'll say. The altcoins, I'm not so, there's some altcoins, I guess. I know there are some fundamental funds out there that analyze all the technology behind these project tokens and funds. And a lot of these projects and tokens have a lot of, it seems to be some very cutting edge type stuff they're doing and solving a lot of problems in the industry. And are those the tokens and those the coins that really take off? But going back to this, sorry, I just went off a tangent there. But how are you going to tell a kid in his late 20s, early 30s, 3, 4, 5 years out of college to go and invest in Bitcoin? I mean, you go a few hours west of here in New Jersey, you're hard pressed to find many people even know what Bitcoin is or what blockchain is. And I mean, I don't know where everyone's here located, but certainly in the New York City area, and you're in finance, you've heard of Bitcoin and you've heard of blockchain for all intents and purposes, unless you're completely out of the industry. But there doesn't seem to be much knowledge or education going on outside of the big, centers of people who know it.
That brings up a really interesting question, because something I talked about Bitcoin to older friends and relatives, and generally you sort of hit that wall of skepticism. And what occurred to me, after doing that a few times is, you look at where a lot of the sort of strong core Bitcoin communities are, and tends to be a lot of overlap in countries that have had, major currency crises, a fairly high technical proficiency and things like that. So there's a cultural memory of, your money in the bank is not necessarily a constant there for one reason or another. And I think most people in the West haven't really had that experience yet, at least in modern times. Certainly, if you talk to people that lived through the Great Depression, you'll hear stories about people keeping their money in mattresses and that kind of thing. But I think over the last 100 years or so, it hasn't really been much of a factor for most people here. It's a very different conversation when you go outside of these countries that tend to be wealthier and haven't had these issues recently. But as far as the intrinsic store of value goes, I think you described very eloquently there, just sort of how the short-term moves are. That's volatility, that's supply and demand, that's your bid ask right there, versus the sort of longer-term intrinsic value, which I think is a really interesting question because obviously Bitcoin doesn't have any cash flow. Harun, you were talking about using Amazon because there's or many as well, there's a cash flow there, there's a recorded data. You can do the math and see, okay, in X number of years, Amazon's going to earn enough money to essentially be worth X amount per share. With gold, with Bitcoin, it's interesting because it's essentially a zero coupon bond, and they both have pretty low carry costs, which is another thing which I think is kind of important about store of value. And in today's rate environment, a zero coupon is not a bad deal. You're looking at negative rates outright in a significant portion of G7 countries. You're looking at negative rates in a lot of other places, and not getting your money sort of taxed, for lack of a better term, just keeping that value at a constant without depreciating from paying that negative interest rate. I think that is a source of intrinsic value in itself right now. And then, of course, the other thing is just the amount of time that the Bitcoin network has been going on. And actually, I think one of the we sort of got a really formative answer to the question of, okay, what is Bitcoin going to do in a financial crisis? We saw that. And obviously, as Manny was saying, all the correlations basically just went to one, but it's recovered pretty well. And I think that was one unanswered question that a lot of people I had talked to sort of had with, okay, so what happens in a recession? What happens in a financial panic? How does Bitcoin act? And that we actually have some data on that. Basically, the more time that passes and the more events that Bitcoin sort of goes through, you sort of build up a somewhat objective, shall we say, intrinsic value assessment, just in terms of how well it actually performs in certain environments.
Yeah, and I think back to the original question, I'm now reading the comments, and it's really interesting to see the discussion of whether people in Venezuela know and use Bitcoin, and actually we have different opinions on that. I would say, like me personally, I'm from Russia. I've spent most of my quarantine in Canada. I travel a lot for work. And I would say that people in certain age group and people in certain financial, no, it's not even about like financial, like or business status, but people do know what Bitcoin is. And usually the answer is, oh yeah, I have like one Bitcoin or I have half a Bitcoin. But I think it's more about the certain level of education and certain level of background. It doesn't even depend on geography. So I don't think it will be a problem to actually get young people and millennials interested in and try Bitcoin, try what it is. I think it will take longer and much longer to actually get institutions to believe in it and take it seriously. And here we have a little bit of a chicken and egg question. Where does the adoption come first? Is it from like the retail investors or is it from institutions? Because there is an opinion that like once there is a wave of like ordinary people using it in their daily life, that's when the institutions take it seriously and go ahead with it. But then again, there's trust of people in banks, like on one hand. So which comes first? But I think like it's not a problem to get. It's only a matter of time when millennials, they invest in Bitcoin, they invest in Tesla. That's pretty much like their entire portfolio for some of them at least.
Well, I'm learning more about stablecoins. I know a fraction of what there is to know, but the more I'm learning, it certainly seems like stablecoins, may be something that is actually backed by something in terms of adoption and getting a social acceptance in terms of something of transaction, to be able to transact. And I don't have a strong opinion about Libra one way or another, whether it succeeds or not. I know there are some very strong opinions on both sides about Libra, I see. But Xenia, on the stablecoin, if someone like Amazon, just using Amazon, which everything is online, everyone's buying something online. If Amazon came out and said, you know what, you don't need your credit card. You're not going to use your credit card anymore, or you're not going to pay in dollars. We're going to use Amazon coin or something. And they said, you can, and it's going to be backed by, I don't know, it's going to be backed by some asset. There's something behind it, right? It makes it stable. Is there a need for that? Is there an opportunity for something in the marketplace to accept that and use it as a something for a transaction business?
I would say that like of Amazon, it will be more like miles for like air travel, because there is certainly an opportunity, there is no need. And I think like one of the big reasons why like Libra got stalled was because it was a big threat like on the government, like for financial level. So that's why like if Amazon goes ahead with it, but it's more, in their case, it could be more like utility. So there is no actual like backing needed in their case. But I think there's certainly like at one point or the other, like most big players will attempt something like that, because there is definitely a use case here. Yeah, so so yeah, maybe for like it'd be interesting to hear Harumi's opinion on that.
It's actually it's interesting that you bring up Amazon as one of the examples of like who could go into it, hasn't really gone into it. And because I was, the moment like Libra came out, right, I was actually kind of waiting to see when Amazon might announce their own coin. Because I mean, for international company like Amazon, having their own currency that they can completely back up, let's say with just US dollars, because they are, for sake of this argument, they are America-based company, and I think their financials all come back into the US dollar based at the end of the day. So it probably takes out a lot of like a headache that Amazon has to go through at the end of the year, every year, when they have to file the appropriate financials at all the right jurisdictions. And also it probably takes away a lot of, credit card fees that they have to pay throughout the year and whatnot. So to me, it was something that no-brainer. Should it happen though, the scale of scrutiny that Amazon is going to be put under is not even going to be comparable to that of Facebook, because Facebook having a coin which may or may not have a real sort of use from the day one they come out, it's one thing. Somebody like Amazon, who actually has the full commercial model around it, and the coin, the moment it comes out, pretty much it's going to potentially wipe out every single currency that is utilized around the world, together with all the credit card business and checking business and everything else that can go with this. I think they're probably gonna make an alliance against Amazon, hoping to find some kind of problems that can delay Amazon to delay this coin. So I am waiting when they're gonna announce their own coin. Maybe they are doing a lot of behind the picture sort of socialization to make sure that something like that wouldn't happen.
I think it's also interesting, for example, what just happened with Telegram, because the use of Ton, their coin within the system, there is much more to their project than the messenger that was planned. And it's not that there was something like an alliance against Telegram, because there was like this strong resistance from the SEC. But I think it would have been interesting to see what would happen there. And actually, like, I'm personally curious what would happen to the network, because like the network is not like demolished, the network exists, so we'll see. But it's kind of like, I think in the case of Libra, there was a strong resistance and basically an alliance, and almost on the governmental level, to prevent someone from doing the project like on this scale. And I think Amazon would see the resistance. Anyone who tried to do something as big would see it. So maybe it's the question of when several big players come together and they're so powerful that there is no force that will prevent them from doing that. So maybe that's something that we will see happening at some point.
I think Libra, the conception, it is pretty amazing as far as I'm concerned, because if you look at it purely as a payments facility, it's incredible, and it doesn't have to be Facebook. But if Facebook has such a large impact, they have so many users. So if you look at like First Data, you look at all these credit card companies, they truly are the middle people. They're the intermediaries, right? So when you talk about disintermediation, you're talking about removing those obstacles and barriers. And if you look at credit card payments, like at restaurants, for example, like a lot of restaurants will take American Express, for example. Why? Because they have high credit card fees that they have to pay to American Express. If you look at the functionality, and this will happen eventually, potentially Libra, potentially someone else, but if you have the audience and you have billions of users already, so you have effectively zero acquisition costs like Facebook does, you're able to then get people's information and be a direct payment processor. And if you could pass that on to the customer, to the user, and to pass that on to the ultimate receiver of the payment, everybody benefits. And I think that's the political resistance, is that the banks have such a strong lobby in this country, and a lot of the payment processors and credit card companies make so much money behind the scenes that the general public is not aware of, in terms of how much they make, not in terms of interest, but in terms of credit card interest, but in terms of processing fees, billions and billions of dollars. So if you look at that kind of functionality and that use for payments, it's an incredible technology, and it truly is a disintermediator. So I think eventually you'll see that, but the resistance is, what happens to these payment processors? What happens to these credit card companies that make so much money by doing nothing, and they have antiquated systems that were built many years ago, but you have to go through the channels because they own the channels. It's like cashing a check. It has to go to the clearinghouse. So they're benefiting from owning the technology that they invested in many years ago. They're still benefiting from that. If you get some type of payment processing functionality on a distributed ledger, it's incredible, and ultimately the savings will be passed on to the users.
Well, definitely the powers that be, as you mentioned, whether it's central banks or governments, certainly central banks are the most powerful monopolies they are, right? The Federal Reserve is the only one who can, create dollars, or ECB is the only one who can create euros, or BOJ, the only one who can create yen, and that gives them an awful lot of power and control over what they controlling the money supply or reducing the money supply, and they control that whole thing, and they control, for all intents and purposes, the entire financial and banking system, right? In terms of everything that goes on, and they don't want to lose that control. And there's probably a vested interest on their part to not like the Libras or the stable coins of the world. And if they do lose control of that, then the adoption of something like a Libra or a stable coin, one of those things could take off, right? And then what would be the benefit to the global financial system if coins like that, or Bitcoin of itself, really took off and gained mass adoption? What would be the benefit to the financial system, banking system, and overall? Mark, Brian, what do you think on that?
So I thought Libra was pretty interesting when they first announced it. My initial thought was, well, they wouldn't have put this out there if they didn't think they could get it through. And about 48 hours later, it turned out I was very wrong about that. And it's really interesting because as Manny kind of laid out, the entities, the companies that are in the best position to put these currencies out there are the ones that are going to be getting the most political resistance from actually doing so. Your FANGs, your Amazon, Facebook, all those guys, because for one, they're not in the payment processing industry, so they're not a part of that lobby that he was alluding to, and for another, that for the reasons that you laid out, when you have the user network, when you're controlling so much data, and then you also sort of get the currency layer in there, then you've pretty much disintermediated a lot of government. And I think they recognize that it's the sooner that they allow something like that to go through, it's pretty much ringing the bell on their irrelevance to a large degree. So I'm not sure what the impetus is going to be for that to sort of play out in the long run. I sort of think of it, we're definitely going into a more multipolar world than we have been in the past. Obviously, you had Bretton Woods that sort of held up the financial system for, I guess almost 100 years. And, now you certainly have the ECB sort of going in their direction, even though it's very much aligned with the US. You have China kind of trying to at least not be as reliant on that system. And I think there is an opportunity here for Bitcoin and for potentially other currencies, backed by companies or what have you, just because you now have, all of these big players are sort of focused on each other. And I sort of think of it as, when Bitcoin kind of entered the public consciousness in a big way in 2017, you had politicians and regulators going after it pretty hard for about a year. And it was, kind of like the little guy who walks into a bar and, he doesn't look like anybody else in there, and, people kind of pick on him, and, he gets, batted around a little bit. And now, you sort of have the bigger players focusing their attention on each other. And, there's going to be obviously a lot of push and pull. And it's, I hesitate to make any kind of prediction about where that's actually going to go. But I will say, I think there is an opportunity for Bitcoin that's pretty unique there, and potentially other coins as well. Just because, if you can create a rail that's not dependent on these large entities that are trying very hard to, essentially monopolize power and control the rails as tightly as possible. And, you have things like capital controls in the mix as well. Having an alternative rail is an incredibly valuable thing. And if you're not attracting all that attention from the big players, then I think there's more room to sort of grow organically and for people to sort of come to the idea on its own merits.
Yeah, I'm still trying to wrap my head around how we get from point A to, point D here. And I think we all see the merits of moving in that direction. I still don't know how we get there, because we're fighting history, right? We're fighting the governments and central banks, and we're fighting history even to make small inroads in there. And I don't know if it's going to be from the ground up, meaning individuals demanding stores or online or in person using digital assets. I don't know if it's going to be, once again, the top down, who knows, Bank of China, some smaller country in the world that adopts digital assets internally and goes complete digital economy backed by something. I don't know. Or if it, like I said, or it just comes from people like us, walking into our local store and using it, or if there's going to be a financial meltdown that's going to get us there. But I think we all see the benefits of the digital asset space. And then the next thing that boils down to is the infrastructure and how that all works. How am I going to own a representation of a Bitcoin on my phone? Would I pay for something? Is there actually a Bitcoin in a wallet somewhere? Does anybody have any idea or thoughts on what that's going to look like?
So I was surprised, right? When the CARES Act came out, I thought that was a perfect use case for utilizing wallets. What was the biggest problem with the distribution of the stimulus checks was getting the stimulus checks to people, right? Because the IRS was using potentially stale data based upon people who had filed taxes, maybe retirees or whatever didn't file taxes, and people didn't pay taxes or whatever, but they were still entitled to get the stimulus check. So there's all this confusion about the government trying to give a stimulus check to a person, and the government can't get it to them. That person can't receive it. And the whole intention behind the stimulus in terms of them using it wasn't true. So that, to me, would have been a perfect use case. If everybody had a wallet, then it could have been some type of transfer to that wallet, and there would have been, an instantaneous transfer, and all the people would have had their stimulus money but we missed that boat. But that's a perfect use case that I'm sure we'll, look upon now retroactively and say, look, this could have been a way to facilitate the transfer very quickly, seamlessly, and immutably, that we knew exactly who got what when, and they got it so quickly, and then they were able to use that money. I think the wallets, are an interesting aspect of mass adoption, because I've spoken to different kinds of people, younger and older people, retirees, and they don't understand how to transfer money. Either you have a wallet on your phone, and it's really all about mass adoption, I think, of wallets, because to some extent, I have to be able to store that digital currency or those digital assets somewhere if I want to be able to receive them, transfer them, whatever. And there's inherent confusion about how that's done. I think we really have incumbent upon us an opportunity to educate. So I think a lot of it falls upon us to educate people about the ecosystem that we're talking about and how awesome and tremendous it is and how much better it could get. But a lot of it is predicated on how you're able to facilitate these transfers, and a lot of it depends on wallets.
And then I will add on to what Manny was just saying. So, I'm going back to the sort of banked, unbanked kind of concept. I do agree with you, Manny, that things like distributing a check to everyone in the nation, basically something like that would have been a perfect use case where this technology actually could have been utilized. But in the US, probably it would have been somewhat difficult because we do have already a built-in system that kind of have worked for most of the people for years and years and years. So we were talking about like the chaos in Venezuela and stuff like that earlier. If this is happening, if the similar thing is happening in the country where not everybody has an access to a bank, 30, 40, 50% of the people, for one reason or another, maybe they live too far, maybe they really don't have a bank nearby, whatever it might be. In the situation like that, use of wallet would be a perfect way to roll out this kind of solution. So I always think about in the 80s, right? The mobile phone was just kind of beginning a somewhat normal concept for a lot of people, but it did not take off in the country like US, where we had already an infrastructure of fixed line phones. But it really took off in like a Southeast Asia, Africa, where they did not necessarily have an infrastructure because they could not afford to build an infrastructure to have a phone, the fixed line phone. So they skipped from basically nothing to mobile phones, right? I think that use of or the distribution or the spread of the concept like wallet is going to be the same. Where it's needed is where we are going to have the adoption first, and then it's going to spread to the rest of the world because it's convenient.
I think there's another. Oh, sorry. Go ahead.
No, you go ahead. Go ahead, Xenia. Go ahead.
I just wanted to say something. Maybe not only where it's needed. I just heard a really interesting idea from Jeffrey Vernick, who was also on one of Blockchain Center panels. It's tipping waiters at restaurants with Bitcoin. Because right now it's probably because like we are reopening the world slowly, but like when we're back to normal, it would be interesting because this is something that every waiter would want to do because they do want to accept the tips from people. And I think this is something like, it's not a necessity, so it's not vital, but like this is somehow like how we can get more like thousands or hundreds of thousands or even millions of people who work in this area. They will be like the adopters because of this like this like small step. So maybe if we do have something from different areas on this level, and only then we can get to the adoption on the level where it's like vital to like all people, and get to the point where we have like government relying on this technology.
So there's a article that came out today and sort of goes on the technology side of things, and curious, Jeremy, what you're seeing on the technology side of things, and Manny. So everyone's familiar with LIBOR, right? So LIBOR, London Interbank Offer Rate, which is basically is just a reference rate set by multiple banks, and they just basically send in some reference rate, and that basically sets the benchmark for $200, $300 trillion in loans and derivatives pricings and everything down to credit card payments. So they've been looking to replace that after, I don't know, it was the scandals where there was a rigging issue, 2012, 2013, that a lot of banks and primary dealers and stuff and brokers got fined for that, right? But now they're coming up with an alternative benchmark, SOFR, or SOFR, I guess you pronounce it. Overnight. I forgot what it stands for. Swaps overnight funding rate or something like that, right? So they and that's actually transacted repo trades in the market backed by treasury bonds. So they're actually using an actual transaction between banks, dealers, customers, whoever, and they're going to benchmark that. So an article came out today, which I thought was pretty interesting, and I don't know if it's a big deal or isn't a big deal, but Jerome Powell came out last week and said he was going to use the Ethereum network blockchain, to monitor or basically confirm or whatever they're using it for, the transactions, and they're going to use that to calculate their potential benchmarks. I may not be saying the article properly right, but I think the fact that or just opinion on Harami and Manny and Brian and everyone, what we think, is that a step in the right direction? That the central bank may be using that technology to, let's say, confirm transactions are done?
I mean, I think anything that can be done to bring any level of public transparency to those kind of transactions is going to be a step in the right direction in the long term. LIBOR obviously had its problems. I believe it was, or still is, done by survey. You alluded to the manipulation that went on there. And ultimately it was a very small group of people that were, whether they were doing it objectively and, at what they thought was a fair market rate or otherwise, that were determining, the rate on a huge number of derivatives and transactions and things of that nature. And I really think, as far as what the adoption of, the Fed's actual use of that Ethereum product is going to be, I did see that article. I was a little bit taken aback. Wasn't really sure what to make of it. I definitely want to learn a little bit more about it. But I think any kind of public transparency that can come to that space is going to be extremely helpful, just because, these derivatives and all these loan products, they have so much sway over our everyday lives. And I think the more that kind of thing is out in the open, the better off we'll be. The more engaged our populace will be with, sort of how politics and finance come together, and, where they can actually understand things and peel back some of those layers of abstraction, and, try to make changes where appropriate.
Yeah, I think it's great. I mean, to the extent that that technology can be used at that level to, again, increase the transparency, that's tremendous. Again, I think we need to get more information. I think it's still early days, but clearly LIBOR, I agree with Brian's comments. LIBOR, there was rigging, unfortunately, and everything was pegged to LIBOR in terms of interest rates and loans and all that. So it hit everybody in a pocket. So something that important where you could have the transparency of some type of digital ledger technology, that's tremendous. I just also want to mention, in terms of Bitcoin, and not to get political here, but Trump did slam Bitcoin a couple of months ago in a series of tweets. And what he did, which I thought was interesting, was he compared Bitcoin to the US dollar. So just by virtue of the fact that he did that, I thought was a really important step, for the fact that he's actually comparing Bitcoin with the USD. I thought just the comparison alone meant that something was going on, where he had to actually make the comparison and say, oh, no, Bitcoin, there's no comparison truly between Bitcoin, because USD is backed by the US government. But I thought it was interesting that, that was kind of floating around in his head, and that he tweeted about it. And that, with that being said, there's been really no efforts from the US government to get involved with putting any limitations or restrictions on Bitcoin. I mean, Bitcoin is deemed a commodity. has been deemed a commodity, and it's essentially has the lightest touch of regulation because it's been deemed a commodity. And obviously there's anti-fraud provisions that go into that. Obviously, same thing with LIBOR. You can't rig trades and have price manipulation and that kind of thing. But effectively, we've done nothing that as far as I'm concerned. The regulation in the U.S. and kind of put my lawyer hat on. There's been no regulatory efforts. There's licensing requirements clearly, but there's really been, to me, no regulatory efforts or governmental efforts to slow down or stymie in any way the growth of the use of Bitcoin, obviously within the confines of regulation in terms of trading and whatnot. But I think that's beneficial, right? In terms of Bitcoin could still grow, and looking at it from the U.S. perspective, other countries have put restrictions on the trading of Bitcoin. We've not. So I think that's good. Where it goes in the future, remains to be seen. But I know Trump, it was a kernel in his mind at that point with those tweets, and you could look up. There was a series of tweets that were kind of interesting. I heard different rumors about, if it was Steve Bannon or whoever, got to him about Bitcoin and why he started a tweet about Bitcoin. But I just thought it was kind of interesting how, randomly he started tweeting about Bitcoin, and Bitcoin's nothing compared to USD. And I was like, that's pretty amazing how President of the United States is actually even thinking, at the same level of, is Bitcoin on par, with USD? I thought it was, interesting for what it was.
I guess any press is better than no press, right? It gets
Absolutely.
out there. And people who follow him, what's this Bitcoin thing he's talking about? And then they're going to Google it or whatever, right? So we're going to go just a couple questions and put everyone on the spot here. Zinnia, where do you think we are 2 years from now and 5 years from now? And what do you think the trend is going to be to get us to the mass adoption in either stable coins, technology, both? How is it going to look?
I think that we're certainly moving towards central bank digital currencies in one form or the other. Although probably I don't think it's a 2-year thing, mostly maybe on a 5 to 10 years time span. This is something that we will see. And actually it's interesting whether it will be some leading nation like US, or it will be a smaller country who it's easier for them to experiment and actually come up with a system that will actually work, and we will certainly see this happening. As for stable coins and their applications in the capital markets and the financial system, there, like in open banking, we need a standard that everyone agrees on before we will actually see a mass adoption. And such things, as we know, they take time. So until that happens, I don't think this will happen in 2 years, but we're getting there because people are starting to realize that we have a really efficient technology, we have something that works, but unless we all decide what type of technology, what solution are we going to use, so we're not getting anywhere. So I think we will see more collaboration, more collaborative efforts towards actually deciding what works. And this works for in several verticals, for governments, for financial institutions. I think as for just retail investors, we will see that people will find out more, it will become common because people who are hearing about Bitcoin in one context or another, they will eventually know what it is. It will be part of school programs. And as for different kinds of, I think that stable, it's actually really interesting. For me, I don't have the answer. It will be really interesting to see where we develop. And I remember a really interesting point by Henry Arslanian from PwC that he said, I think I heard him speak last year on Fluidity Summit. He said that one thing on the way to mass adoption by institutions is hedge funds, because when someone invests on the larger, on the higher level, and there is a trust by an institution, but this kind of players, they can put the assets into different kinds of things. So we have Bitcoin, we have something that's more that institutions are more used to. when we are exposed to something that there is a stable coin and there is a portfolio, like really different, like diverse assets that are backing it, I think it will be much easier for something like that to find adoption. Yeah, so just like a couple of random thoughts for different verticals.
Great. That's great. And that sounds, and I agree with you on the hedge fund thing, which I'm going to jump in with my 2 cents in the end there as well. Harami, next two to 5 years, technology. What do you think? What's your favorite technology, story, and how is it going to grow, and how is that going to help the mass adoption here? And where do you think we head to?
Yeah, so a lot of people say a lot of things about the blockchain, how it's not growing up to be what it's supposed to be, what people say it is. But one of the things that I would like to bring to this table right now is that if you think about all those technologies that we talk in sort of one breath as emerging technologies, as we discuss it today, the blockchain obviously being one of them, but artificial intelligence, the space technology, the internet, all of those that we really utilize today. I mean, most of them, artificial intelligence, the internet, the space technologies, they actually existed from the middle of 50s, and they are what they are today. Right? I mean, what is it? 70 years later, they became what they are today. And blockchain-based technology, it's only 11 years old. So if you think about how much it actually achieved in just a little bit over 10 years, it's an amazing, amazing progress of how much people utilize it today, how much people know about it. Although, yes, there are still a lot of people who don't know about that. But until like Watson came out there, probably a lot of people didn't really think about artificial intelligence either. So, let's face it, we are dealing with the technology that has done an enormous growth in just 11, 12 years. So where can this be in 2 to 5 years? I think that it's still going to have a lot of homework, even 5 years from now. It's still going to have its kinks. We still probably will be talking about some of the same regulatory aspects that we talk about today. But I do think that more people will know about it. More people kind of start touching Bitcoin's investment. Yeah, the hedge fund will be huge. I talk to those people every day, right? On a certain sort of like topics and then deals. And I think that this will definitely grow at much faster speed than any other what we call emerging technologies have done in the last 70 years. One of the things that obviously is on my radar is that with the quantum computing coming, and then that's being in the good people's hands is a really good thing, but also in the bad people's hands, they can do a lot of damage with the firing power that the computer has. And I wonder how cybersecurity, the overall sort of security business underneath all these technologies that are making these technologies to work safely are going to come along with it.
It's fascinating. Well beyond my realm of understanding, but would love to hear more. That's great. And the quantum computing, my colleagues are big into that. I don't want to call it side that industry, that space, right? So, Manny, regulatory compliance. What do we need to do in this industry the next 2 to 5 years so that hedge funds, banks, individuals, family offices, whatever, feel comfortable in the space? And how is that going to help grow the industry the next 2 to 5 years? And where are we now, and what do you think we need to be?
I think we were making great strides, and we really were making a lot of vast strides. And then we had the crypto winter, we had issues in 17 and 18 what ICOs, and then the SEC really came into and intervened in the industry and slowed things down. And I think that hurt us, right? We had a lot of forward winds propelling us in the right direction in terms of providing regulatory relief, in terms of federalizing the regime. I think the problem, if you look at it, do a comparison between traditional capital markets and digital assets and crypto, is you have a federal regime, you have the SEC, and you have the CFTC, and then you have the states, and you have the banking authorities, but they all kind of work together. If you think about the space that we're talking about right now, it's almost competitive, right? You have what I call the alphabet soup of regulators competing against each other. And states like New York State with the BIT license, they wield a lot more power with regard to digital assets and cryptocurrency and virtual assets than they do with regard to traditional securities. I mean, what is DFS compared to the SEC with regard to Amazon? But earlier your example, well, the New York Stock Exchange. I mean, they kind of play their role, but the dominant role is really the SEC, the CFTC, and in the exchanges. But in our space that we're talking about, because there was a void, because it was so new, right? The states stepped up, and states like New York stepped up very early, creating a BIT license. And I always argue with people when I do panels, even with clients, is why do investors in New York need more protection than an investor in New Jersey, right? Why do you need a BIT license if you operate in New York, but you don't need a BIT license if you take the PAT train onto the Hudson River and go to Hoboken, right? Or investors. I mean, it makes sense, but it kind of doesn't make sense. And I'm a big federal regulation kind of person, where I think there should be a federal regime because we are the United States of America, and we should have different state laws, but the state laws shouldn't be beyond what the federal regime is, or the state shouldn't fill the void for what doesn't exist by the federal government. In other words, the state stepping up and saying, this isn't clear in terms of what New York did in Division of Financial Services in 2013 with in 2015, I should say, with the BIT licenses. They realized that there was this ambiguity and this void. So they jumped in and created a virtual currency license, the BIT license. I mean, do we still need that today? Should not we federalize that as compared New York to Wyoming? Right. So we need to level the regulatory landscape where we don't create an arbitrage in terms of one state has an advantage over another, because we need to protect everyone and protect the industry. So I'm big in terms of reviving the efforts that were made a couple of years ago with regard to federalizing regulation. With that being said, then we have the states cooperate with the federal government. I'd like to see more movement in, as I mentioned earlier, with regard to getting Bitcoin, exchange traded products, and exchange traded funds. I'd love to see those approved. Whatever needs to be done to convince the SEC to get comfortable around the surveillance aspects of Bitcoin by those exchanges where those exchange traded funds or exchange traded products are listed. That would be tremendous. I think that'd be a big boon for Bitcoin and the adoption of Bitcoin. I'd also like to see STOs come back. I think there's a place in the market for STOs. I think STOs are very interesting, and I think there is a need for them in the market. What I'm kind of struggling with, though, is although I mentioned earlier that the U.S. government has not really hurt Bitcoin or put up obstacles in terms of buying Bitcoin, they clearly have put up obstacles and guide rails in terms of regulatory perspective about I could own Bitcoin as a citizen of the United States, but in terms of trading, you need licensing around that in terms of who I buy it from and how I buy it generally. But what I think is interesting is if the governments around the world, and you mentioned this earlier, Tor, which I thought was very insightful, is they cede control if they give up their native currency, right? Because the ECBs, the Fed, I mean, you look at what's going on in the market right now, where effectively have a V-shaped recovery because of all the priming at the pump by the Fed in terms of and before that with all the qualitative easing. So the Fed will lose control in terms of printing money and in terms of controlling interest rates if we move to Bitcoin or an alternative. So that to me is the tension. I think from a regulatory perspective, generally, we need federal regulation, and we need to resume the efforts that were made a couple of years ago. I think the problem is because of everything that we've gone through with, with COVID and slowing down the economy, it's really hard to revisit those efforts with members of Congress on, the Financial Services Committee in the House, because obviously they're more concerned with reviving the economy. So if I went to, Maxine Waters as the chair of the Financial Services Committee in the House, I think, we could raise it to her, but I'm not sure it's going to get the attention right now because it seems to be more of immediate need. And I think because of that, we're gonna suffer. I think 2-3 years out, we'll be in a much better position than we are today. A couple of years ago, I thought we'd be in a much better position in 2020, but obviously current events happen and they take priority, and things have to be moved around and shifted around. But I would love to see a federal regime. I like what Wyoming's doing. I think Caitlin Long has done a great job advising the state of Wyoming. I'd love to see some type of federalization in using the state of Wyoming as a template and as a roadmap of what we should do nationally, and adjust the laws in certain states to comport with what they've done in Wyoming, create a federal a regulatory regime based upon what Wyoming did, which I think is great and could be a big boon for our ecosystem and for all the digital assets and digital trading.
Oh, now I have to go see what Wyoming did. I know Wyoming is a big space, but I don't know what they did. I have to check that out later. Brian, from a trader standpoint, what's going to get you more interested in viewing digital assets and Bitcoin as a more traditional asset that follows the rules of intermarket relationships better? And how do you think that evolves in the next couple of years?
So, I mean, like I was saying earlier, I think the relationships with Bitcoin and the markets are a little bit more developed, just in terms of the amount of liquidity and it being just kind of a risk asset, very broadly speaking. As far as what it would take for me to be more involved, I mean, really, it's just a question of a lot of it is a question of time. I still am involved in trading in the space, but I do, I'm selfish. I like to keep regular hours. And when you're talking about a very volatile asset class, I like to stick with higher conviction trades. So as far as, the super active stuff, I don't see those things coming to crypto like regular trading hours. It doesn't really make sense at all with digital assets. As far as viewing it as a broader asset allocation that has more relevance to people around the world, I think pretty much all the other panelists have given some really good reasons as to the things that would need to take place for that to happen, whether it be regulation, whether it be stable coins in certain jurisdictions, or certain technologies working together. I think the Paul Tudor Jones thing was a bit of a sea change. Obviously he's a guy that's been in business for a very long time, and he's pretty sharp, to say the least. And you look at somebody like that, he's not managing a huge amount of money, I guess, relative to where he was in his career at another time. But those are hundreds or thousands of people that are invested in his fund that have some Bitcoin exposure now. And I think you're going to see a lot more of that. You'll see asset allocators saying, hey, we've got private equity. We've clearly seen some issues with that over the last couple of years, where it's, you're somewhat speculative. Yes, definitely not investment advice. Just personal opinion. Yeah. But, I think digital assets, even aside from Bitcoin, are going to grow very organically and quickly. I remember there was the player on the Brooklyn Nets, I believe, who was trying to option out parts of his contract using digital assets. And I think, you look at things like that, you look at gaming and all the currencies that are coming around with that, and gifting and that sort of industry. I think there's going to be a lot of somewhat unexpected areas of growth for this. Just sort of a lot of there might be an unusual confluence of tailwinds coming together, and I really hesitate to say what it's going to look like in 10 years. But I just sort of see things like people auctioning off a part of a long-term major league athletic contract, and very old school thoughtful guys making an allocation to Bitcoin. I think all of these paths are going to come together at some point, and I hesitate to say what it's going to look like when they converge, but it'll be very interesting.
Well, I'll throw my 2 cents at the end here. From what I see, is there's going to be two things on the next couple of years, in my opinion. And one is definitely the more traditional CTA hedge fund family offices coming into the space. The CTA types, the systematic guys, more as a opportunity to make money, and from a trading vehicle perspective. Some family offices for a diversification. I know, Manny, we all know that S&P got crushed in March and Bitcoin got crushed in March. Up until then, they were kind of lowly correlated, but as Brian said, when things go bad, everything correlates to one, which just seemed to happen then, right? But I do think we didn't talk about it today, and it wasn't the topic, but the industry is really needing some sort of central clearing mechanism, more like traditional traditional markets with prime brokers and clearing, where their counterparty holding their cash is a bank that passes KYC, AML, and passes all their credit checks. There are solutions in the industry now that are getting there. There's sort of an arms race, and everyone's probably seen the news recently, but there is definitely an arms race. And I think once that solution and that ecosystem is developed and in place, you're definitely going to see a lot of real institutional type money come into the market. I think that's sort of, I don't know if that's 2 months from now or 2 years from now, but certainly, or 1 year from now, certainly within the next year, I think you're going to see that happening. And that's going to add a lot of liquidity to the system. And both making and taking, make the market more deep. And you hopefully won't have these shocks like we had on Monday night into Tuesday, because the market will be deeper and more developed in that respect. And then I think on the individual front, we're going to see a demand from, the millennials or whatever you want to call them, or whoever, or us, right? Going to Starbucks and demanding people to, or stores to use our coin. And I think there could be a big demand for stable coins. I'm not an expert on it, but some kind of stable coin that's backed by something. Or it may just be Bitcoin. I don't know. But I think that's going to have to come from the individual person, and it's not going to come from the top down. And hopefully there isn't a financial catastrophe, because if we have a financial catastrophe that drives us to start using digital assets, well, quite frankly, it's bad for all of us. So I don't want the financial catastrophe to be the impetus that gets us all to use digital assets at a global scale. Hopefully it comes from the demand from individuals. So that's my last 2 cents. We're going to wrap it up here in a second, but real quick, where do we end the year? The year's about halfway over. Zinnia, where are we at the end of the year in Bitcoin?
In terms of price, I think we will have some
you got 10 seconds to answer. This is 10 seconds. This is the 1 minute the 1 minute Q&A at the end. Where do we end the year in Bitcoin?
Yeah. Pleasant surprises in price. That's it from me.
Rami, do you want to take a guess, a gander?
I have to dream big. Let's go for 20,000.
Manny.
This is not investment advice. 12,000.
Okay, Rami's basically 100% return. Manny's 20% return. Brian, where are you?
I've seen. I don't want to give a price target. That's my.
Higher or lower? Okay, we north of 10K or south of 10K?
I'm cautiously optimistic. That's what I feel comfortable saying. I don't want.
Are you a buyer here? You're a buyer here?
I'll keep trading it. I'll
I
keep
know.
track.
I'm gonna go with Rami and go with 20K, 20K.
I like it.
You're my friend.
I hope you guys
You're
are
my
right.
friend,
I hope you're
Brett.
right. I don't like being wrong, but I hope I'm wrong.
Oh, well, 12K, huh? And unless we go to 5K first and back up to 12K, then you have trading opportunity there. But anyway, we need to wrap it up. I got a hard stop here in a minute. I want to thank Nick Spanos and everyone else at the Block Center for hosting this again. And every week we always get a very interesting panel. And I learned a lot, and I wish we had more time. And there's some individual topics that I would love to talk in, one-on-one, or we could have a whole, topic with some of all your specialties. And it was really fascinating. Thank you so much for sharing the insights, because now I realize how much I don't know listening to you guys talk. Now there's a lot I got to figure out here. And I would once again say Nick and Anna for putting all this together. And it was a good time and chatting. And I hope everyone has a wonderful Thursday night.
Thanks
Thank you so much.
Thank you.
It was
Thanks,
a
everybody.
pleasure.
All right, thank you.
Bye.
Great panel. Thank you.
Okay, bye.